The Tesla turmoil picking up speed after another bearish note from Wall Street. This time it was Citi saying $36 is the worst case scenario for the stock. Tesla's now on track for its worst month in more than a year, but one group on Wall Street has been cashing in on this move. Leslie Picker's back at headquarters with the details. Hey, Leslie.
That's right, Melissa. The chorus of Tesla downgrades is music to the ears of short sellers. Those with bearish bets on Tesla have raked in more than $1 billion in profit this month. They've made nearly $4 billion on Tesla's declines year to date. And this comes after 3 consecutive years of losses for Tesla's short sellers as the stock price moved higher. For those longtime Tesla bears like David Einhorn, the wait appears to be finally paying off, but this is really one of the few bright spots for shorts as the hedge fund industry increasingly abandons that side of the trade. Overall short interest relative to market cap of the S&P 500 is at 1.7%, the lowest level in 13 years, 2006, before the financial crisis. Short selling in individual names has become less and less common in recent years as the bull market pulls stocks higher. Investors have been burned too many times on their bearish bets, so they've been making fewer and fewer of them. Hordes of short-biased hedge funds have gone out of business as a result. But short sellers may be partially to blame for some of Tesla's recent stock plunge. One Bank of America analyst writing, quote, "It appears much of the pressure on the stock over the past few days, weeks, has been driven by shorts pressing aggressively." The firm said that may mean shares will soon jump from a short squeeze on any good news. But other analysts seem less convinced. Tesla has seen 12-month estimates for its stock price get cut a dozen times in just the last month, and bad news continues to trickle out, with Consumer Reports saying that Tesla's autopilot function raises serious safety concerns. Melissa.
Leslie, thank you. Leslie Picker back at headquarters. Tim Seymour is one of those shorts. How do you think about the short position now?
Well, first of all, we know that Elon Musk was exercising options. There's some sense that this is a guy who thought his company was worth a whole lot more than it is, and he's doing it now at a level when clearly it seems like there's a collateral requirement. To me, look, Morgan Stanley's Adam Jonas did a call today, and I thought it was a great call because I think, ultimately this is a guy that has at times seen a bullish side. And what he talked about today, I think, is the most notable thing. He talked about a lack of demand. And he talked about a lack of demand also in a place like China at a time, by the way, we're going through some kind of a technology cold war and a company that's relying on robotics, something to think about. The other side of it is Tesla's debt really becomes a big problem when, in fact, the company's not growing. Debt for any company becomes that. And he stressed restructuring. And so to me, if you're a short here, I don't care how much the stock's gone down. I think people, this is what you've been waiting for. And I think the focus on short sellers and the social media stuff here, I've never seen a sideshow like this. I mean, this is not the story. People are vilifying people that are doing a lot of work on the company. And I think, in fact, it's coming to fruition. It's not been noise.
I think the bulls and the bears on this stock have been vilified and nothing in between. Right. But I mean, in terms of thinking about, not thinking about how much the stock has gone down, if you are short, shouldn't you think about how much you've made on the way down and either decide
I've been rolling down puts and basically taking some profits, but definitely pushing them down. I went from 240s to 175s out in September.
So that's an interesting to do it, right? Just taking your profits as you go along.
Right.
I do think at some point, and maybe it's 150, that's where I thought last night, I said maybe at 150 you start to get a bit of a short squeeze. I think that's probably where you'd stick your toe in for a trade.
Grasso?
When the SEC news hit, we were sitting on the desk.
Which SEC news?
Yeah, that's the first one.
The funding
secured.
Okay.
That's where I thought the stock would be cut in half, and I believe it was anywhere, on a daily basis, could be anywhere from 280 to 300. So I agree with BK around that price level where I think it's like a 130, 150. But if this story ends, and this is no longer that cult stock where everyone has to get in, and you're starting to see top 10 holders, big accounts that are liquidating that were never liquidating before.
For quarters
then
now.
The story's over.
It's not just a single quarter. It's been at least a couple quarters.
So why would you cover it? I mean, again, the fundamentals are deteriorating. The institutional base that kept this thing alive. And again, the call today, I'm not going to put words in anybody's mouth, but there was a focus on this is a restructuring opportunity for a company that maybe doesn't even want to do that.
The stock has tumbled, and so have the bonds, and Karen's been looking at the bonds. You say it could be signaling some more pain. Why don't you head over to
I do. I always say that I think that the debt investors are much smarter than the equity investors, and I think the debt investors have something to tell us here. So let's take a look at these are the new bonds that they priced on May 2nd of this year. I think the stock was $244. And so The first day, the stock actually traded up to 255, and the bonds traded above par, and that was fun. Then you started to see concerns about Tesla get worse and worse. And so these bonds have traded down to about 89. But let's remember, they only have a 2% coupon. Let's remember, some of the value of these bonds is you have a 5-year call. If Tesla starts to trade over 310, these bonds are convertible into Tesla stock. So this is convertibles are very bullish. But let's look at just the credit part of Tesla. Let's look at let's go to our next bonds. There's no convertible element here. This is just Tesla credit. So we saw right here when they announced they would do a financing that the bonds traded up. Good. There'll be more capital in the company. That's good. The concerns again, and these bonds have started to trade down. And if we look at where they are now, remember, this is just credit only. There's no element of a conversion here. Let's look at our next chart, and let's look at the credit cost of these bonds. These bonds yield over 9%, okay, over 9%. So that means if Tesla wants to go back into the market, this is a yield to maturity. If Tesla wants to go back into the market to issue more debt, it may be difficult, but they're going to have to be paying over 9% to do that. So it's difficult to get a deal done, but it's also, remember, difficult to service debt when you have to pay 9%. Just as a reference, if you think about GM or Ford, if you look at similar senior unsecured bonds, they're trading in half the price, 4.5-ish or so. So this should be really a concern for Tesla shareholders about how poorly Tesla's debt is trading.
And that's when we get into this sort of vicious cycle where the stock goes down, the bonds trade badly, the cost to service that debt goes up much more, and that's even more trouble for the company.
Well, the company's gross debt to market cap has never been higher. So I guess the question, Karen, is ultimately, what do you envision? I guess this is really, what do you envision the impact over the next kind of the short term? Is there a press against these bonds as well that's going to be more aggressive downward pressure on the equities?
I mean, that could happen. I'm not sure. I think that one of the things, though, I mean, you could see in the converts some trading around the stock, but it makes me think, first, they should have done more of an equity and debt raise at the time. I think we all thought that. The second thing is maybe they need to start issuing equity, which is dilutive, I know, but when your debt costs this much, maybe you need to start issuing equity.
So, go ahead. Sorry.
So, Karen, when you really look at this does look like a $10 number to me when I look at the equity.
Wait, you see Adam Jonas's $10 bear case.
Well, the way she maps it out on the screen, it looks like it can't survive. But is there an element to when we start to see Apple was sniffing around a couple of years ago, when we start to see that Google was sniffing around a couple of years ago, is there any element to that where he could just be looking for a white knight to come in and save the day?
I mean, it's possible, of course. That would be the largest deal Apple has ever done. I mean, I don't know. Maybe Google thinks they don't need it with Waymo. I'm not sure. It's just that it's an expensive company. Even with it trading down, it's still an absolute dollar value. It's a very big company. To me, issuing equity solves some of the problem.